Good evening and welcome to the last edition of Capital Markets in the first quarter of the year 2018. I'm Temple Ashaju. Well, in the course of the program, you may wish to join us on our social media platform at Channels TV on Twitter and, of course, at CTV Temple on the same network. The first quarter of 2018 just ended today, 31st of March, and that's the deadline for some of the federal government's policies implementation in terms of the voluntary asset and income declaration scheme known as VADS. And it's also the deadline for one of the capital market initiatives conducted by the Securities and Exchange Commission, that's the SEC. I'm referring to the free registration window for electronic dividend, e-dividend for short. And that reminds us of that question: have you registered free of charge? Because in the next few weeks, you might have to pay some yet-to-be-known fees for that. But still on the first quarter of this year, the equity market opened Q1 on a positive note, with the all-share index opening at 38,264.79 and the equity capitalization at 13.617 trillion naira. But by the end of the first quarter, that's the 29th of March, the market had returned some 8.53% for this first quarter, moving from 41,504.51 points with an equity capitalization of 14.99 trillion naira. Now, the federal government reissued a couple of bonds, introduced the 7-year program, while the central bank also sustained its liquidity tightening strategies via mop-up auctions. We'll table all of these activities and many more on the show as we kick off. Our guest is an analyst with deep insight on the market, so stay with us. We'll kick off now with two earnings that we had in the market, and one from the oil and gas sector and the other from the construction subsector of the Nigerian Stock Exchange. 11 PLC is number one, also released its audited full year 2017 results with an earnings per share of 20 naira 85 kobo, declaring a dividend of 8 naira per share. The oil marketing leader, which completed its acquisition of Mobil PLC last year, achieved a revenue of 125.25 billion naira in the period from a 94.1 billion naira turnover in 2016, the preceding year. Cost of sales increased by 39.9% from 78.62 billion naira to 109.98 billion naira, while gross margin declined from 16% achieved in the base year to 12% in the full year 2017. And then let's look at Julius Berger PLC from the construction subsector of the NSE. Earnings from that market reflect the exit of that construction giant from a loss of 2.4 billion naira in the preceding year to a PAT, that's profit after tax, of 2.6 billion naira for the full year 2017, and that translates to an earnings per share of 3.61, that's 3 naira 61 kobo, enabling the board of the directors to declare a dividend of 25 kobo per share. Despite the bottom line outperformance, underlying earnings for the full year period remain relatively weak, as the profit after tax was largely supported by extraordinary income from profit on sale of fixed assets, particularly weighed down by slow traction in the construction sector of the economy at large. FY17, that's the full year 17 revenue, remained flat year on year at 141.9 billion naira, missing 148.7 billion naira estimate projected by analysts at Vitiva Capital Management. So let's move on now to weekly analysis of our markets, and we will start with the fixed income markets, where the bonds market was largely quiet in the first 3 days of the week with an overall bearish bias. Demand only improved towards week close, aided by improved liquidity, but yields on benchmark bonds rose just 16 basis points week on week, and that's on the average. For the numbers on the screen, those represent the figures coming in from the FMDQ secondary market yesterday for the last trading day of this week, which was shortened by the holiday, and the total deals for bonds is 103, while total value is 12.90 billion naira. Moving on to treasury bills, where the treasury bills market saw seizure from the Central Bank of Nigeria conducting some OMO actions through the week. Trading remained mixed across the market from week open to midweek. There was pressure by tight market liquidity, supported by maturity inflow of 189 billion naira on Thursday. For the deals on the FMDQ markets, which is the secondary markets, 371 numbers of securities were traded, while total value of that is 106.822 billion naira. For the unlisted markets, listed securities markets, which is the NASD OTC Securities Exchange, USI for this week, that's the unlisted securities index, topped 663.82 points, and that's having done some 15 basis points improvement from the 662.80 points realized in the preceding week. But in terms of quarterly performance, the NASD reported growth in trading activities fueled by 112% increase in value from 1.61 billion naira in the first quarter of 2017 to 3.59 billion naira in the first quarter of this year, as well as a 45% increase in volume from 239.93 million units for this time last year, and to 351.96 million units in the first quarter of 2018. In terms of the companies doing well there, you've got the Central Securities Clearing System, which is the market's depository. That's Nigerian Capital Market Depository, tradable on the NASD OTC. By volume, it traded so impressively as investors did 218 million units of shares in 180 deals, while our Freeland Properties, which had its AGM during the course of the just ended week, followed in terms of transactions, with 67 million units traded in 49 deals. Now let's talk about the equity markets, which is one of the major side of capital market